In this video, we will look at David Tepper's latest moves in his portfolio from Alapalooza Management. This is for Q2 2025 and I'm here on Datarama. You see all the buys, all the sales in his portfolio and you have plenty of activity. So I think what we will do in this video is we'll go through the main holdings, maybe see the reason why he sold or why he bought certain stocks, and I will show you specific things, specific charts so you can understand companies better, because this is a very interesting portfolio. We've been covering the changes in his portfolio for many quarters now, and you have key takeaways, key themes, investing themes that David Tepper is bullish on. So that will be pretty interesting. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And my performance is also due to copying what the best investors on the planet are doing. And this is exactly what we are going to do today. So let me put the mic over there. And let me tell you something before we start. For David Tepper, if you look at the past quarters, he had key themes in his portfolio. One being China, the Chinese trade. It was like the main trade in his portfolio. Secondly, you had energy, so Vistra, energy, Talent Energy, these kind of things. Three, you had chips, so Nvidia, Lam Research, these kind of things, okay? So now you will have some updates. And in the last quarter, so Q1 2025, he started to trim the Chinese positions a little bit. Guess what? We are in Q2 2025. He continued to reduce the Chinese exposure. So Alibaba was reduced by 20%. You had JD.com reduced by 13%. PDD reduced by half. Normally, in the past, he had some ETFs, right? This one reduced by 80%, Chinese large cap ETF. So basically speaking, what we find is a reduction overall in the Chinese exposure. Fair enough. You can justify this any way you want. If you look at these businesses, you can take Alibaba. The stock has been up 40% year to date, so a successful trade from Mr. Tepper, and the large momentum we had at the beginning of the year faded away because the businesses are doing well, but not exceptionally well, right? It was just a rebound play because of a big stimulus that happened at the beginning of 2025. So it seems like he had this big wave and now he's trimming the position. I think Alibaba will report on August 21st, 21st. So it's in 1 week from when I record this video. It will be pretty interesting to see what is happening over there. Alibaba is a big business that is not growing that much, that is profitable and rewarding shareholders with buybacks. With the same kind of size, you can pick another Chinese business called Tencent, pretty famous business, and in terms of market cap, it's relatively in the same size, or even larger, I would say, twice larger. What is the market cap of Tencent? $600 billion. What is the market cap of Alibaba? $300 billion. So yeah, twice the size. It's a large cap. And Tencent actually reported earnings. So maybe you want to do some research on Tencent, but this is not the goal of this video. The goal of this video is just to comment on the Chinese exposure from David Tepper. So Alibaba, a big reduction. You had, let me go with the Chinese exposure first. JD.com, same thing, right? You will have the same pattern for the stock that went up a lot at the beginning of 2025. Look at this. And then all the outperformance collapsed. And now JD.com is in a negative territory. Year to date, minus 7%. Actually, JD.com is cheaper than Alibaba. So if you want to invest in Chinese retail market, maybe JD.com is the way to go. They are doing buybacks, they are cash heavy, and they are cheaper. The other one is Pinduoduo that has been cut by a half. So what is really interesting for Pinduoduo is the faster growth, obviously, It's large company, like $160 billion in market cap, but the profitability is good, the valuation is fine also, but the company is growing a lot. You can compare these charts of revenue growth, compare them to Alibaba or JD.com, and you don't have the same problem. For PDD, they continue to grow a lot. For PDD, they don't have any debt. They are filled with cash. For PDD, they don't do any buybacks. So choose your investment style, right? Either you want something that doesn't grow a lot but is rewarding shareholders with buybacks, so Alibaba and JD.com, or you want more growth, so PDD. Not exactly the same business model, but I would consider them to be competitors. So you can choose your fighter. What is really interesting for PDD also is that Lilu is buying. So David Tepper is selling, well, trimming, right? He still owns it. He didn't sell out of the position. But at the same time, you had Lilu in Q2 2025 that started a PDD position. And that's his second largest holding when it comes to US investments. US investments because that's an ADR, right? So if you don't know Lilu, that's the best Chinese investor. That's the Chinese Warren Buffett and a protege of Charlie Munger. And we don't know his whole portfolio because he mostly invests in China. But for his US portfolio or ADRs, etc., international stocks like this, you have Bank of America first and Pinduoduo like 18% of his portfolio. So David Tepper is streaming, so he still has conviction, right? If he had lost conviction, he would have sold out completely. And at the same time, Lilu is buying. So maybe there is something to check here. If you want to continue the research on PDD, I would encourage you to look at the short seller report that was published a couple of quarters ago. PDD was accused of being a fraud. The stock tumbled and then recovered and then went nowhere. On a year-to-date performance, we are at plus 18%. So still outperforming everybody. And I believe PDD has a lot of potential in the future. I will not buy it personally. I want to shy away from Chinese investments. I've been burned too hard in the past by Alibaba, but I am monitoring PDD, see what is happening. For the moment, the business is good, the business is intact, and seems like the growth will continue for PDD. So now you have the Chinese exposure for David Tepper. So a reduction overall. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Second thing that you can note on this report is now the second largest performer, the second largest stock is United Health. What a crazy move. I mean, in the past, David Tepper didn't have a lot of United Health in his portfolio. And now he added by 13x his investment or something like this. It's a 10x investment, making United Health the second largest investment. That's pure value investing here at the same time that Warren Buffett or his lieutenants are buying United Health. Well, David Tepper is following the move. So this is a big corporation in the US that is getting destroyed right now. So maybe David Tepper is seeing what others are not seeing in this market. I would trust David Tepper in this kind of situations. He has shown us retail investors that you can trust him, you can follow him when he does these big trades. So if you are hesitating right now to buy United Health, maybe David Tepper will give you an extra boost of confidence to pull the trigger and buy this one. So this is this is a quality company, I would say, that is having a large drawdown, maybe the largest drawdown in history. The stock is down 55% from all-time highs, and David Tepper is seizing this big opportunity. That's a very interesting pick, actually. I mean, because it's so big when it comes to the changes in his portfolio. Extremely big, extremely shocking to see this. So that shows a lot of conviction. I would say if you hesitate to buy United Health, this is a very, very, very good sign. Next one on the list is Amazon. No big surprise here. He just had added like 7%. That's still a big conviction for him, third largest position, and still continue to hold this big thesis. Amazon has crashed a little bit since the latest earnings report, like minus 8%. That's not a crash, but you get my point. And now it has recovered since then. So maybe, maybe he bought during April. I would say this would be a good time to add Amazon. And even right now, Amazon is not expensive at all, in my opinion. So, yeah, I am a shareholder of Amazon, and I don't think it's expensive at the moment. So definitely something to check here. Okay, next one. I mean, I told you had the first theme of this portfolio that was China. The second theme was energy, right? So let's look at energy. You had Vistra, energy here. What do you have next? No. Energy transfer here. No. Oh, he has Beidou also, another Chinese exposure that he trimmed. Okay, very well. Fair enough. For Vistra and energy, he trimmed both of them. Vistra was trimmed by 20%. Energy was trimmed by a little bit, by 3%. If you don't know Vistra Energy, that's one of the key leaders when it comes to electricity providers in the US. It's a big company, like market cap of $60-70 billion. That's one of the largest power producers and retail energy providers in the US. It's a winning company that is being given more contracts. And if you think AI will rule the world, AI will need a lot of energy, a lot of electricity, and you don't have this electricity right now. So companies like Vistra or the other one, Energy, will benefit from big data center build-outs, from big electricity demand in this market. And maybe this is priced in. These stocks are up a lot on a year-to-date performance. Year-to-date for energy, plus 60%. If you look at the 3-year performance, it's a triple. So maybe this is already priced in this market. I would beg to differ. Actually, I am monitoring these stocks to check if these are good quality companies to invest. For the moment, I don't own them, but I'm monitoring what is happening right now. These electricity companies will be very, very profitable in the future. So even though he trimmed, maybe it's just a way to take big profits and reinject in other businesses. Because he trimmed, but it's still 10% of his portfolio. Another one that you can add on this list is Constellation Energy. I don't think he owns Constellation Energy. Yeah, same vibe. They just signed a contract with Meta Platforms for 10 years, 20 years. Similarly, $100 billion market cap. These are big players in the energy industry that you can invest in if you want to get some exposure. So let me go back to energy. Yeah. So big trimming here, 20%, 3% here. Yeah, I mean big trimming. A little bit of trimming to buy other things with this cash. So still conviction in the energy play, still conviction in the Chinese play, but both sectors had some trimming. And now we are going to the third key theme of David Tepper, and you will see a lot of moves. That's about chips, that's about tech, the tech industry. So you have Meta Platforms being trimmed by 30%. Similarly, Meta Platforms had a lot of gains recently, so maybe it's just a little bit of trimming to reinject the proceeds into other things, right? Meta Platforms is at all-time highs right now. Maybe they wanted to reinject the proceeds to Nvidia. I mean, this move is big for David Tepper. they added 500% to the Nvidia position. So you multiply by 5 or 6 your Nvidia position. Even though Nvidia is trading right now at all-time highs. So maybe he took the opportunity in the April market correction to reinvest massively here. Yeah, I mean, it is for Q2. So it's between March, end of March, when the stock Nvidia was trading at $100. And the Q2 ends in June 30th. Okay, so he added between $100 and $150. So now he's in the positive territory. And I think he will continue to hold this position. That's a massive increase in Nvidia. Similarly, you have Google that is being trimmed by 20%, exactly like Meta platforms. He trimmed a little bit of Uber, minus 15%. He trimmed a little bit Microsoft, but almost nothing, right? And similarly, look at this. TSMC, Taiwan Semiconductor, being added plus 300%. That's a lot. That's a lot. He is clearly betting on big players that, for his opinion, will continue to be big. TSMC, same thing. I think you had a big correction for them. The stock was trading at $150 and now it's at $240. So yeah, maybe he timed the bottom. Maybe he bought during April, maybe a little bit after this. But the result is the same. He bought during the dip for a quality company available at a good price. So he's taking advantage of the volatility of this market to maybe trim positions that are doing nothing, like the Chinese exposure, for example, or the energy plays. Maybe he wants to take some profits there to reinject into big chip manufacturers, including Nvidia and TSMC. That's some good flexibility that not a lot of investors have. So David Tepper knows this stuff very well. Next one, you have JD Pinduoduo reduction. Intel is a buy. That was very surprising, actually. Intel is a buy for David Tepper. If you had followed Intel, you would have seen a lot of pain for this company. Look at this chart for the past 10 years. Zero gains for 10 years. Even losses for the past 10 years. For the last 5 years, the stock has been cut in half. And you had problems and problems and problems. Many changes in the management team. And now the stock is getting destroyed. The company is getting destroyed, actually. A lot of problems at the moment. Seems like David Tepper is seeing an opportunity. Similarly to what he sees with United Health. So if you want some push to help you pull the trigger and buy Intel, maybe this will be it. Maybe this will be it, and maybe this is the bottom for Intel. And David Tepper is a value investor, so maybe he knows something about Intel. I will not touch Intel for my personal stake. I have a quality portfolio, so Intel doesn't fit in. But for value investors, maybe this is a signal that you can have. ETF about China, no change. Lyft, trimming in Lyft, similarly to Uber, right? Uber has been reduced by 15%, Lyft by 11%. Deutsche Bank, no change. Micron, similarly, look at this, another cheap company. Micron, so again, it's a very niche company, I would say. In an oligopoly, you have Samsung, you have SK Hynix, and you have Micron. There are 3 big players in this industry, and apparently he's liking this industry a lot. Similarly, a cheap company, he doubled the position in Micron. Similarly, I think he took the opportunity of the market correction in April to buy more. Okay, so you see the signs for David Tepper. You see the big trends in his portfolio that are moving. Well, the microphone has disappeared. Oh, that's funny. Okay, fair enough. Let me continue and say that he didn't touch energy transfer. So another theme of this portfolio, energy, he didn't trim this one. And let me just comment on other positions. But now you get the point. 3 big themes in his portfolio. China being trimmed a little bit. energy being trimmed a tiny bit, and chips, an increase for chip companies. But I want to comment on other things because you have interesting companies also. So you have this one, LHX, that has been added, and this is a company about weapons. So I don't know how to pronounce this one. L3 Harris Technologies, that's missiles, weapons, stocks that will benefit from wars, conflicts in this world, and companies that are making money right now, a lot of money right now. So there are, I mean, this is maybe a bet on war. This is maybe an investment in case we have conflicts in this world and peace will not come soon. He is investing more into a missile company, weapons company, and he is buying another one, RTX. Similarly, RTX, a defense company, weapons company, defense, missile, aerospace supplier. And these companies, these stocks are trading higher and higher and higher because war is profitable to them. This is their core segment. So this is a small part of his portfolio. Let's say 1% here, 1% there, maybe a third one in his portfolio, but we're talking about 2%. So it's not a big conviction for David Tepper, but he is starting to get more exposure in case we have prolonged conflicts in this world. In case you have more wars, you will need more missiles, and they will benefit. Other things that are happening in this portfolio, you have ASML, no change, 1%. Qualcomm, no change, 1%. He is buying small positions, including United Airlines, and he's reducing Lam Research. Oh, that's quite funny. Lam Research being trimmed by 20%. Again, a cheap company. I own Lam Research. And similarly, you had this big market drawdown in April, and now the stock is rebounding. It's a quality company available at a good price. I like Lam Research a lot. And apparently, he doesn't like it as much as I do, because he trimmed the position by a little bit. It was a small part of his portfolio, right? Like 1%, but he trimmed. Maybe David Tepper wants to focus on big players in the chip industry, the TSMCs of the world, NVIDIAs of the world. Maybe he will touch in the future AMD, or maybe he will increase ASML, but he wants to focus on winners, right? Big companies. He trimmed Oracle. Oh, very good. He almost cut the position completely. He reduced Oracle by 80%. Okay, fair enough. Another investment in the airline industry, Delta Airlines. Yeah, these are small positions. He bought United Airlines. He bought Delta Airlines. So starting positions to monitor for David Tepper. And small ones. Okay, but that would be it. Now, if you look at Dataroma, you will see this. You will see all the buys, all the additions, and all the trimmings, all the reductions. But you will not see companies that are being sold. So a very quick tip for you, just click on activity here. You will see all the activity in his quarter, and you will also see things that are being deleted in this portfolio, things that he has sold completely. And you scroll down and you see sell 100%. So in the past page that I shown you before, we didn't see this. We didn't see what he sold completely. So he sold Wynn Resorts. I believe it's an entertainment casino company. Las Vegas Sands, entertainment casino company. Broadcom here, an energy company here. Very well. And these were all small parts of his portfolio. So the big companies in his portfolio stay big. And the only big addition that is coming in the top 3 companies in this portfolio, this is United Health. A very intriguing portfolio, but I think the key themes in his portfolio are very promising. So something to monitor. This is a key signal for United Health if you want to pull the trigger, and a very interesting portfolio. So yeah, that was the update for Q2 2025 for David Tepper. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy,
when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address, just click the first link in the description and I'll see you on the other side.